Up next here, we have our first bond index mutual fund. That is the Fidelity US Bond Index Fund, trading under FXNAX. So once again, this will be exclusive to Fidelity. As you get older, especially, you want to consider putting some of your portfolio into bonds instead of having 100% in stocks or equities, as this is going to limit your downside potential if we see a market correction or a market crash, for example. Bonds are going to have less return potential than stocks, but the important thing is here that they are also significantly less risky. So you do want to consider this as you get older and closer towards your retirement age, when you want to be actually using that money, and taking a massive hit during a stock market crash could be detrimental to you being able to retire, for example. A general rule of thumb a lot of people follow here is the 120 rule. That's where you take 120 and subtract your current age, and that's the percentage that you might want to have allocated into stocks or equities, with the rest going into bonds. So if you're 35 years old, for example, that would give you 85, which would be 85% of your money in stocks and 15% in bonds. And every 5 years, it's recommended to change that allocation. So at age 40, for example, you might want to switch to an 80-20 portfolio. Now, if you're interested in a Fidelity ETF that is comparable here, there is also the Fidelity Total Bond ETF that would be available for purchase through any brokerage account. So keep that in the back of your mind if you are not using Fidelity, for example, as your investment provider for purchasing these shares. But what we're going to do now is click here on the composition tab and take a look at the portfolio diversification. This shows us here that 42% of this is in US Treasuries, which are going to be the safest bonds. And then you have about 26% in corporate bonds, and then 25% in MBS or mortgage-backed securities. So that is the core composition here of this portfolio. You can also see, based on the regional diversification, about 93.7% is US, with about 6.3% being foreign bond exposure. And looking at the credit quality, about 70% is US government, which is the top tier. And then everything else is going to be in the investment grade bond categories here of being BBB or better. The last thing I want to take a look at here is the fees. So if we click here on fees and distributions, we can see this has a net expense ratio of 0.025%, which is very reasonable.